A lot of people ask me how I've been able to buy so many investment properties and not use my own income or lack thereof to qualify for those loans, for those properties. What I use for most of the properties that I've been buying is a Dscr loan. A Dscr loan stands for debt service coverage ratio. Debt service coverage ratio is a key measure of a company's ability to repay a debt. So what does that mean? We are not using my income. We are using the property that we're buying to qualify for this loan. So how does that work? So you pick out a property, or when I pick out a property, I make sure that the rents in the area, but I mean, you should really do that regardless, because obviously you don't want to buy a property that doesn't cash flow. I have very specific standards for what I want my properties to be at cash flow wise, which for me is 8%. The more the better, of course, always, and that's a cap rate. And if anybody wants to know how to calculate that, let me know and I will do another video on that. You need to make sure that the rent in the area covers the purchase price, the loan amount, not the purchase price. I want you to have the loan amount. Like the 8%, you can probably do lower than that, but that's my rule because I like to be able to cash flow a certain amount on top of whatever my mortgage and my insurance and my taxes are. How much do you need to put down? You need to put down, the lowest you're gonna find is about 20%, and it goes up to around 30%. That's based off of the different lenders that you can go to, and that's also based off of your experience and the property. So to qualify for a Dscr loan, the property must meet or exceed the lender's criteria for rental revenue. So they use a formula. The formula for the Dscr loan is the monthly rental income divided by the mortgage payment. And that's usually 1.0 or 1.5. You need 20% down at least, but the more is always better to just be on the safe side. And then you need to find a property that you know you can rent for a really good amount. What I usually like to do, bonus tip, I use like 3 bedrooms, 2 baths. The ones that I buy with a loan like this, they usually have minimal repairs, but I can buy them at a good discount so that the rent is going to more than cover the payment. I really hope that helped you guys out. I hope that answered a couple questions, because a lot of people have been wondering how I've been buying those properties. Once you have one and it's working well, then you can refinance, take that money out, and then use 20% to buy another one. So that's kind of how, like, once you get going with this investing thing, it becomes easier and easier, and you learn more, you get more savvy, you get better deals, you get more money, and things are just taking off. So yeah, that's how I've been able to buy most of my properties.